All new Tesla Model 3 vehicles are now eligible for the full €6,990 tax credit. As part of the Inflation Reduction Act, the U.S. government introduced a new federal tax credit plan of EV owners in 2023, and it requires at least 50% of the battery components to be sourced from the US and at least 40% of the vehicles minerals to come from the US or another country with free trade with US. And since most of the Model 3 configurations use batteries from China, only half of the tax credit, €3,494, can be applied. All that changes from today through, as Tesla announced that all three Model 3 tires are now eligible for the full €6,990 tax credit. Previously, only the performance they're qualified for the full reimbursement. Unfortunately, we don't know what has changed and why exactly the new Model 3S standard and long range options now qualify for the full tax credit, but it's probably safe to assume that Tesla changed the batteries at least for its US sales. The official message on Tesla websites also mentioned the Model Y, AWD, long range and performance models to be eligible for the €6,990 tax credit as well. US government updates EV tax credit rules. Some electric cars no longer qualify. The long-awaited US Treasury rules on battery components sourcing and manufacturing have finally been announced. The new rules apply to all electric cars sold in the US, but the government is giving a 2-week grace period for anyone to be able to complete the purchase under the old rules. The battery guidance was meant to be released last year, but as the government struggled to come up with it on time, the new EV tax credit was introduced as a single component, and only the rule of the vehicle origin were applied. It meant that any electric cars manufactured in the US and under the threshold price qualified for the $7,500 tax credit for the buyer. As of April 18th, the tax credit is split into two separate components. The first $3,750 will be applied to all vehicles made in the US with at least 50% of the battery components made in the US as well. The second $3,075 will be granted to cars with batteries that contain a minimum of 40% of its critical minerals coming either from the US or a country that has a free trade agreement with the US. The second part requirement will be increased to 80% by 2027, and the 50% requirement for the battery components to be made in the US will go up to 100% by 2029. The increase in both requirements will be introduced gradually every year between now and the deadline. This will result in a fluid list of vehicles qualifying each year, but the US government believes it will speed up the investment in battery production in the country. But that's not all. Beginning next year, any electric vehicle with a battery containing any components made by a country of concern will be automatically disqualified from a full EV tax credit. Unfortunately, China is classed as such, and it means big change to the qualified vehicle list. The same approach will be applied to the battery minerals. Any mineral coming from the from the country of concern, even in the smallest amount, will mean instant disqualifications.